Ladies and gentlemen, Asian guy here. I need you to stop what you're doing right now. I need you to put down your phone, close the chart windows, and listen to me very carefully, because what just happened in the last 72 hours is not a policy announcement. It is not a campaign promise. It is a declaration of economic war. And the target is not who you think it is. On Monday morning, Donald Trump signed an executive order that sent shockwaves through every trading desk on Wall Street. The order mandates an immediate expansion of the United States Navy fleet. Not next year. Not when the budget allows. Immediate. The specifics are breathtaking. 355 ships by 2027. That is not a typo. 355 combat-ready vessels in 3 years. Right now, the U.S. Navy operates 296 ships. That means the shipyards have been given orders to build 59 major warships in 36 months. Destroyers, submarines, aircraft carriers. And this is where it gets interesting for those of us who actually understand how supply chains work. Because you cannot build a modern naval destroyer without one very specific material. You cannot build the radar systems. You cannot build the propulsion systems. You cannot build the electromagnetic launch systems without industrial quantities of silver. The financial media is calling this a defense policy. The Pentagon is calling this a strategic realignment. But I am telling you what this actually is. This is a commodity squeeze disguised as a military buildup. And the moment that order hit the wire, the algorithms on Wall Street figured it out before the analysts did. Silver futures gapped up 4% in the first hour. Copper jumped 3%. Palladium spiked 6%. The defense contractors rallied. The industrial metal miners went vertical. But here's what nobody's talking about. Here's the part that keeps me awake at night. The stock market, the broader equity market, the S&P 500 reversed a 2-week rally and dropped 2.1% in a single session. Think about that. The president just announced the biggest naval expansion since World War II. Defense spending is about to explode. Government contracts are about to rain down on shipyards and manufacturers. And yet, Wall Street sold off. Why? What do they know that we do not? They know that this order is not just about building ships. It is about locking down supply. It is about cornering the market on the raw materials that make modern technology possible. And they know that when a government steps in and declares that it needs industrial quantities of a finite resource, the private sector gets squeezed out. The tech companies that need silver for solar panels, for EVs, for semiconductors, they just got pushed to the back of the line. And Wall Street just priced in the implications. Let me walk you through the math, because this is not speculative. This is engineering fact. A single Arleigh Burke-class destroyer requires approximately 15,000 ounces of silver. That is just for the radar arrays, the communication systems, and the electrical infrastructure. A Virginia-class submarine uses closer to 20,000 ounces because of the propulsion systems and the sonar. An aircraft carrier, a Gerald R. Ford-class supercarrier, uses over 500,000 ounces of silver. These are not guesses. These are published figures from defense contractors. Now multiply that by 59 ships. Even if we assume a conservative average of 25,000 ounces per vessel, we're looking at 1.5 million ounces of silver demand just for the Navy expansion. But that is not the real number, because those ships need maintenance. They need spare parts. They need upgrades over their 30-year lifespan. The true silver demand from this order is closer to 4 million ounces over the next decade. And that is just for the ships. That does not include the missiles, the drones, the electronic warfare systems, or the satellite infrastructure that supports the fleet. Here is where it gets ugly for the market. Global silver mine production is roughly 850 million ounces per year. Industrial demand already consumes 550 million ounces. Investment demand, jewelry, and coins take another 250 million. The market is balanced on a knife edge. There's no spare capacity. There's no strategic reserve sitting in a government warehouse waiting to be deployed. The silver market was already tight before this order. And now the United States government just walked into the room and said, we need 4 million ounces, and we are willing to pay whatever it takes to get it. This is not a free market anymore. This is a command economy wearing a free market mask. And Wall Street understands that when the government becomes the largest buyer of a commodity, the pricing mechanism breaks. Private companies cannot outbid the Pentagon. They do not have the budget. They do not have the authority. So what happens to Tesla when they need silver for their solar roof tiles? What happens to Apple when they need silver for their iPhone circuit boards? What happens to the solar panel manufacturers in California when the silver they ordered 6 months ago gets diverted to a defense contractor in Virginia because the contract has a national security priority clause? They get rationed, they get delayed, they get priced out. And their stock prices reflect that reality. This is why the market sold off. The algos are faster than the humans. They saw the order, they ran the numbers, they understood that industrial silver is about to become a strategic material with restricted access. And they sold tech stocks, they sold green energy stocks, They sold anything that relies on uninterrupted access to industrial metals. But there is a deeper game being played here. And this is where the conspiracy stops being a theory and becomes a documented pattern. Trump did not wake up one morning and decide the Navy needs 59 new ships. This decision was briefed to him by people who understand commodity flows and who understand that China controls the choke points. Here's what I mean. China produces 15% of the world's silver, but more importantly, China refines 40% of it. Even if the silver is mined in Mexico or Peru, it gets shipped to Chinese refineries for processing. And if you want that refined silver turned into the specific alloys and forms required for military applications, you need Chinese metallurgical expertise. The United States outsourced its refining capacity 20 years ago because it was cheaper. And now we're about to find out what happens when you need millions of ounces of a material and your adversary controls the refining infrastructure. This Navy order is not just a buildup, it is a stress test. It is Trump asking the question, can we actually build these ships without relying on Chinese supply chains? And the answer that Wall Street just gave us is no, not at current prices, not at current capacity. The only way this order gets filled is if the price of silver doubles or triples to incentivize domestic refining investment. And that means inflation. That means cost overruns. That means the defense budget explodes, and the Federal Reserve has to print more money to cover it. Wall Street just priced in inflation. That is why the market sold off. Think about the supply chain mechanics for a moment. The United States has exactly 2 major silver refineries capable of producing military-grade material. 2. China has 47. When a destroyer program manager calls a supplier and says, I need 15,000 ounces of 99.99% pure silver formed into specific conductive alloys, that supplier has 3 options. Wait 18 months for domestic refining capacity to scale up. Pay triple the spot price for immediate delivery from existing stockpiles. Or quietly source the material from China and hope nobody asks questions about the chain of custody. All 3 options are inflationary. All 3 options are strategic nightmares. And Wall Street just priced in all 3 scenarios simultaneously. Now let us talk about timing. Why now? Why did Trump sign this order in January of his term? Why not wait until the economy stabilizes, until the debt ceiling gets resolved, until the trade wars cool down? Because he knows something. He knows that the window is closing. He knows that in 6 months or a year, this order might not be possible. And what does he know? He knows that China is preparing to restrict exports of critical minerals. We have already seen the warning shots. In December, China announced export controls on gallium and germanium, 2 materials essential for semiconductors. Last month, they floated the idea of rare earth restrictions. The next shoe to drop is silver. China does not need to ban silver exports outright. They just need to slow down the refining process. They just need to prioritize domestic demand. And suddenly, the global market is short 200 million ounces with no backup plan. Trump is front-running that move. He is placing the order now while the supply chains are still functioning. He is locking in contracts with the shipyards before the price explodes. He is forcing the Fed to acknowledge that we are entering a commodity-constrained economy. And this is where it gets interesting for us. For those of us who have been watching the silver market for years, who have been ridiculed for talking about supply deficits and manipulation, this is the moment of validation. The United States government just admitted, through its actions, that silver is a strategic material. They just admitted that there is not enough of it to go around. They just admitted that the price is about to reprice higher. But Wall Street is not celebrating. Wall Street is panicking because they understand that when the government competes with the private sector for resources, the private sector loses. They understand that the easy money era is over. They understand that the era of unlimited cheap commodities, cheap labor, cheap energy, that era just ended with the stroke of a pen. The market sold off because the market just realized that the next decade is going to look like the 1970s. Inflation, resource nationalism, supply shocks. Except this time, China is not a cheap manufacturing partner. China is the competitor. China is the adversary. And China controls the supply chains that make modern life possible. The institutional money managers are running worst-case scenarios right now. They are modeling what happens when silver hits $50, then $75, then $100. They are calculating the ripple effects. Higher input costs for tech manufacturers mean lower profit margins. Lower margins mean earnings misses. Earnings misses mean multiple compression. Multiple compression means the NASDAQ could drop 30% even if the economy stays technically healthy. This is not a recession trade. This is a structural repricing of everything that relies on cheap access to industrial metals. And the market just realized that cheap access is over. The era of $20 silver subsidizing the tech revolution is finished. The new era is $50 silver rationing the tech revolution. And Wall Street is not ready for that conversation. So what happens next? What happens when the shipyards place their orders and the silver market realizes that 4 million ounces of demand just landed on a market that was already in deficit? The price goes vertical, but not immediately. First, we get the squeeze. The industrial users panic. They start hoarding. They start securing supply at any price. The premiums on physical silver explode. The futures market disconnects from the physical market because the paper contracts cannot deliver the metal. We have already seen this playbook in palladium, in rhodium, in lithium. The government announces a strategic need. The market goes into backwardation. The price doubles in 6 months. And here is where the timing becomes critical. The first shipyard contracts get awarded in March. The initial silver orders hit the market in April. By May, the industrial users realize they are competing with the Pentagon for the same material. By June, the premiums on physical silver are running 20% above spot. By July, the futures market is in chaos because the commercials cannot source the metal to deliver against their short positions. This is not speculation. This is the mechanical sequence that plays out every single time a government declares a strategic material shortage. The private sector does not win these fights. The private sector gets rationed, gets delayed, and gets repriced out of existence. And here's the kicker. Here's the part that should terrify anyone holding dollars. When the price of silver doubles, it is not because silver got more valuable. It is because the dollar got weaker. It is because the Fed has to print money to fund this expansion. It is because the government just committed to spending hundreds of billions on a project that relies on materials we do not control. The bond market knows this. The bond vigilantes are watching. And if they decide that U.S. debt is no longer sustainable, if they decide that the dollar is being debased to pay for commodity wars, they will dump treasuries. And when they dump treasuries, interest rates spike. And when interest rates spike, the stock market craters. Right, Wall Street just front-ran that scenario. This is not a policy decision. This is an economic bomb with a delayed fuse. Trump just told the world that America is willing to outbid everyone for strategic materials. He just told China that we are preparing for conflict. He just told the market that the era of globalization is over and the era of resource competition has begun. And the market responded by pricing in the chaos. The reversal we saw this week is not a technical correction. It is a regime change. It is the market telling us that the rules just changed. The old playbook, buy the dip, trust the Fed, ignore the deficits, that playbook is obsolete. The new playbook is simple. Own the physical, own the commodities, own the assets that cannot be printed. Because when governments start fighting over supply, the price of everything that matters goes to the moon. And the price of everything that is fake, the paper, the promises, the fiat, that price goes to zero. Stay alert.